Right. Well, it is as I said, quiet day on Wall Street, and that gives us an opportunity to pay more attention to Canada's stock market, which has been on a roll. We're only a couple of days removed from all-time highs for the TSX. Of course, despite the worries about Canada's economy, the strength in gold stocks this year, the recent run-up in some of the energy names getting a lot of attention. But where do we go from here? Let's get some more insight and analysis on investing in the Canadian market from Jeannine LiChong. She is the Executive Vice President and a Portfolio Manager at Waratah Capital Advisors. Thanks very much for being here.
Thanks for having me.
You know, it's an interesting time. We talk about it all the time on BNN Bloomberg, the fact that there is uncertainty for the economy, but we've seen all-time highs for the Canadian stock market. When you look at the investing landscape here right now, what do you see?
I think it's a really good time for Canada. The U.S. market has obviously outperformed the Canadian market for several years, and it's been very concentrated technology. I don't have to tell you that. And I think it's very healthy to see the market broadening and include other sectors other than technology. And Canada has lagged, and I really think there's an opportunity to invest in Canadian stocks for a variety of reasons.
All right. Let's go through some.
Okay, sure.
What's top of the list?
I think top of the list is the recognition politically that we have to actually diversify our exports. And there's been, a buy Canadian. There's been a change in government. I think a recognition that we have to actually diversify, and a real push in terms of, it's been very difficult for any projects to get started in Canada. The permitting, it takes several years. And I think there's a recognition that that process has to be shortened. And what this means is that there's going to be more capital spending in Canada, which I think will be very good. There's a multiplier effect with capital spending, and I think it will be very positive for Canada.
That's a really important point, because Canada was getting some pretty poor grades on creating an environment that provided certainty for investment in recent years.
Right.
And there was a fear, as Donald Trump took office, that it might get even tougher, given that he was seen as sort of this business-friendly president. But all of the noise around trade and tensions has created a new layer of uncertainty actually for spending. And you're saying, by comparison with the new Canadian government, perhaps influenced by what's happening in the U.S., their goal is to create more certainty, and now we wait to see if companies do feel that confidence in actually investing and spending?
I think you're right. I think there's been a hesitancy to actually spend money, deploy capital, because we didn't know what the final rules were. There's also a recognition that we can't rely only on the U.S. for exports. And I think Canada is doing all sorts of things to try and diversify, talk to different countries and look at different things to accelerate this.
Okay, so that's one of the factors you're watching when making the case for Canada. Are there any others?
Well, I think the fact that the market is broadening. So in my opinion, I've looked at some of these Canadian stocks, and they've been cheap for very long. And I think, we're seeing some takeout activity, capital market activity has been increasing, and that's all very positive.
Okay, so I say this all the time, and most of our very smart BNN Bloomberg audience knows the dynamics of the Canadian stock market, but you've got banks and financials that make up basically a third of the index. You've got energy, the second largest weighting at around 16, 17%, then materials, which are about 14%, and that's really, to your point, provided a nice lift for the TSX this year, and then industrials at around 12%. So there's four groups that make up a huge amount of the index before we even talked about things like, technology, et cetera. Do you think that those are the kinds of areas that could find some interest from investors if things go well?
Well, I think we've already seen it in the material, particularly in the materials sector with gold running. I just heard your comments prior to me coming on in terms of the oils, and obviously it's politically motivated right now in terms, but certainly that would be good for oil and gas companies in Canada. But if you have infrastructure spending, if you have capital spending in Canada, it is good for business activity, which is good for banks. We'll see some loan growth, which has been tepid for a little bit. And that's the multiplier effect in terms of how it runs through in the economy.
Yeah. It's funny. It's a great argument, and I wonder if it's a desire for people to invest in the U.S. and a desire for people to invest in the Canadian story are mutually exclusive. We had a conversation earlier with a long time, die-hard U.S. equity investor who's not giving up on the technology companies because they've got a lot of heft, and even if their valuations are big, they feel like those companies are in good positions over the long term. But it does feel like in the short term, people have been they're kind of going back and forth. I mean, this is, to your earlier point, this has been one of those years, looking at the first 6 months or so, where investors have been trying to shake the tree on where the best place for their equity positions to be globally.
I agree. Like, there's no doubt the U.S. technology sector has growth, and it will continue growth. Just look at what's happening with AI. But there's a case for diversification, and I think Canada being cheaper, the fact that we're going to have more capital, a little bit easing in terms of permitting, desire to look at other geographies to export is all positive. So it's not mutually exclusive. There's just Canada, I think, has been ignored because of the technology spotlight, I would say, in the last couple of years. And with the commodity and certainly our currency has actually been stronger. A lot of people tried to avoid Canada because of the currency. It's, I think, making a case for investing in Canada.
And I know we sometimes hear about recession worries in this country. And, you know, this week in the U.S., the central bank story was, well, we're not ready to cut interest rates because we've got inflation concerns tied to trade uncertainty, but they also are keeping their eye on possible cooling for the economy. The Bank of Canada in this country is watching, you know, the jobs market. They're also concerned about things like core inflation. So how much of the Canadian story is ultimately impacted by where the economy ends up in 6 months, 8 months, a year?
So I would say our style is very fundamental. We're very bottoms up, but you can't ignore those factors, I would say. And if you're going to ask me what are the 3 factors that I'm watching for in Canada to make sure that the investment case is still there, one is inflation. The second one is employment levels, and then obviously interest rates are going to have a factor in this whole thing.
And then since you've laid out a really interesting macro case for the Canadian stock market, are there any individual stocks that you might sort of single out as examples, like even on that infrastructure story that you were talking about?
Right. So we own WSP and Stantec, which are engineering companies. I know they've done very well. They're probably on the high end of valuations.
I don't know that everybody realizes, though, you know, just because these engineering consulting firms, they're not as well known as Alphabet or Amazon, but the stock charts over the long term have been pretty eye-opening.
They've done very well. They actually have some global presence. They've actually been buying companies outside of Canada. But their backlog right now, and with the infrastructure spend that's going to happen, has been at all-time highs. Margins have been increasing, so it's not surprising that the stocks have done very well.